Big bank earnings so far have beat estimates on the top and bottom lines this season, and we'll begin to hear from some of the regional banks today. For more on the health of the financial sector, markets, and more, let's bring in Bob Diamond, CEO of Atlas Merchant Capital, who's John Galt. I didn't know that. Oh, that's where it was named. I'm proud of you. And former CEO, I've always been proud of you, of Barclays. You're in the business. You probably knew what happened over the last 3 months, or had a pretty good idea. But after having seen some of the major banks, did anything surprise you? Anything better than you thought? Anything worse than you thought?
Yeah. It's kind of a normalized environment, Joe. I think, just to your point, I think earnings were quite strong. You know, I think the underlying fundamentals for the larger banks in the U.S.
Fundamental, I really like that. That should be a word. That's a portmanteau, the underlying fundamental.
You gotta invent one new word each time you come on.
That's really good, Bob. I'm gonna start using that. So it was mostly in line with your expectations. So then highlight what is going. So did you see JP Morgan's worth $600 billion?
Yeah.
I mean, it's never been there before.
Listen, the big four U.S. banks could continue to get larger, more concentrated, and I think the real issue, you know, it was interesting to see the discussion around Goldman's earnings, which to me looked fantastic. The concern was 11% ROE, and looking back to 99 and the public issue, and kind of 25 to 30% returns. And the truth is, they're much larger, they're more concentrated. They're more like utilities, the big four banks. They carry much, much higher capital levels. And we're not going to see returns like we saw in the 90s and the 2000s. I think 10 to 15% more utility-like returns. The banks are safe. They're really, you know, it's a bit of an oligopoly for the big four from a deposit point of view. Earnings are strong, but they're going to be 10 to 15%. They're not going to be 20 to 30%.
Do we need stricter capital requirements, whatever it's called, Basel? Do we need that? Will it ever become
I think
required?
We really do, given that the larger banks are becoming larger and more concentrated, and everyone says they're safe, you know, nothing bad can happen, but look what happened to Credit Suisse. And look what's happening within Switzerland now, where there's really one mega bank, and there's a lot of concern. Not that UBS isn't performing well, they're performing really well, but what if something went wrong? And so I think the larger capital levels, Joe, are here to stay. And you know I'll say this, we're very focused on the regional and community banks. We think there's a huge opportunity there. We think it's really good for the U.S. economy and the U.S. financial services industry. And we think there's going to be consolidation. And I think that's where an investor can see good returns over the next couple of years, even better returns than the large banks.
So when we had some issues in that group, and we thought duration risk was going to be everywhere. It never was it?
Well,
or did we just wait? We're waiting it out, now rates are coming down, so we're going to be okay?
No, I mean, I still think that the Treasury portfolios, both of the big banks and the regionals, are a bit upside down. As you know, they don't get mark to market, but you can see through. They will correct themselves over time. I think if you can imagine an environment where a really strong regional bank has strong capital, so an investor has come in and you've shored up the loan, any loan provisions, you've shored up any capital in the Treasury portfolio, and now you're focused on what does the environment look like going forward. Well, you have kind of 5 to 5.25% rates. We know they're going down, you know, over time. You have loan demand in the economy as we've never seen really for the last decade. So the go-forward environment for a strong bank, particularly a regional bank, is outstanding.
Is there potential for more regional banks being bought up? Is there the appetite for that? Would the federal regulators allow it?
You know, I think the regulators right now are encouraging people like us to put private capital in. Do the regulators want to see more weekend failures because of specific situations? Of course not. That's never an ideal for them. Becky, I think the 4,500 regional and community banks is probably, you know, it was 7,500 around the S&L crisis, and then it consolidated. We would expect over the next 2 or 3 or 4 years that 4,500 regional and community banks would go to something like 2,000, plus or minus 500.
Wow.
That there'll be a period of healthy consolidation. where we can identify and people can identify the strongest, and the strongest will be able to acquire, some of the too small to succeed.
But basically, you think half of the community banks that exist today, or regional banks that exist today, are going to be gone
over the next
4 years?
2, 3, 4 years. We think we'll see healthy consolidation. Yeah.
Wow.
I wanted to ask you about Trump's comments about Jay Powell.
Whose comments?
Trump's comments. I don't know if you saw Trump's comments about that he would like to keep them, but the implication was also that he wouldn't have to keep them. That would be a new
come on, he's got 2 more years, right?
Well, no, but that's the question. He sort of suggested. He said that
what was
he'd
he
keep
going
them,
to do? Fire him?
Well, that was the implication that he could.
Well, I think he's doing a good job. I think for
Trump,
for Powell, I think for a comment that, as far as I can see, he has 2 more years to his term.
And you don't believe, as I think most people don't believe, that he could be fired, or you do?
I don't think so. I'm not an expert in that space. I do think this, Andrew, and I think it very strongly. I think the independence of the Fed is really, really, really important. And I think it's important for the markets, and it's important for the credibility and brand of the U.S., of our economy, of our financial services industry. And so I don't think it's the question you asked, but I do believe that we need to preserve the independence of the Fed.